Hello. Hi everyone. It is Sunday, the 26th of July. It is just heading towards 7:15 in the evening, and I'm going to have a look at the global indices. I'm starting off with the Wall Street with the Dow. Okay, so a couple of things worth mentioning. We have a rejection here, effectively 27,000, and it's broken the low. All right, so the uptrend that we had in place is gone. Also that weekly candle we've produced a nice little bearish rejection candle there. Within the monthly we look okay. There's nothing here necessarily other than the fact that this is clearly a significant level, and so it's going to be interesting to see if we can break past that. And so what I'm going to do this week is continue to monitor this. It is very likely, or not very likely, it's very possible that there we could find some support in this area where price is at the moment. And so I'm just going to mark that. It's happened before, and so I'm prepared for that to be the case, and see if indeed perhaps buyers do step out of here and we manage to stall and climb and recover back up within this range and then ultimately break out. At the same time, if we do potentially break the low of this weekly candle, we could see price start to head lower down towards 25,400. And that's really about it. That would then indicate potentially a rejection if this becomes a bearish candle, similar to one of these on a monthly scale. That could indicate a potential turn to the downside, heading down towards 24,000. So I'll deal with that when it happens. I'm not going to jump the gun just yet. There's plenty of room where it is now to still recover, to find more buyers and push back up and disregard last week's candle and then carry on up. At the same time, there are certainly signs here that indicate there is the potential for bearishness. Keeping in mind that historically these markets tend to go up rather than down. This is why, even though if we weren't looking at US indices, I'd be like, this is a confirmed bearish kind of, it's going to turn around. If it was a currency, I'd be like, yeah, it's definitely going to turn around. But it isn't always the case with the US indices. Having a look at the S&P 500, we've come back down. We've actually dropped back below this support level. And so this was a range that I'd highlighted and spoken about. There's a nice little rejection candle here. We're a little bit overextended, but not ridiculously so. But we have demonstrated, it would appear, that we have demonstrated that this particular level is significant at this point in time. So I'm just going to mark that, and again, I'm just going to highlight that as a potential level of resistance to get past. So again, I'll be looking for turning around at this point. If we do break this previous weekly low, that's fine. That means we're then obviously starting to head a little bit lower, and that would then imply that we're getting a weekly retracement down towards the lower these lower levels down here. And at the same time, I'm going to be monitoring this area right about here for a nice little bullish candle. If price is going to find its feet and climb, I will see that tomorrow or the next day. Looking at the tech, US tech, what is very important to take away from this, we broke the weekly low. That was quite important. I did mark it here last week. We double topped over there. Okay, so that all makes sense. But what is important to take away from this is that this technical uptrend, which was in place, is now done. So we are not in an uptrend on the daily anymore. We actually are, let's just go and have a look at the highs, and let's see how annual return I want to be about it. 110728 versus 1107. So we would technically be in a downtrend here, lower highs, lower lows. But I'm going to call it range bound for the time being. We have become overextended on the weekly, certainly coming down to around the 9,700 level would be great. Bearish candle, broken the low, that could happen. Again, coming just even down to 10,000 is quite feasible and healthy. The monthly, as I said, is quite overextended, and again pulling back down here towards 9,000. So that really puts us in a 10,000 to 9,000 upper lower area range. That would be feasible. And as I said, this is the tech index, the Nasdaq, which is actually the most bullish. And so this is why I'm very cautious with this, because it could recover. But if it has produced, in this case, a lower high, lower low, or certainly has broken the weekly low, a move into this area which I highlighted before, but a move lower is also possible. Here's 10,000, not that far away. Could just go a little bit lower for a couple more days and then recover, and that would actually literally be a weekly retracement, and then it could continue on. But it is overextended on the monthly, and so it really depends on how overbought this market is intending to become on that monthly. That's really what it's about. On the weekly, a very small drop, even one big down day or just a couple of normal down days and then back up would be enough for a healthy weekly retracement, and then we could resume that uptrend. Russell 2000 is just coming into its previous levels of resistance and support. So not looking that bad over here. Just these are small signs. And if we do end up excuse me, if we do end up having a bigger drop from this point, these are the kind of little signs that you see. But I would say at this point, like I said, that's why I would mark these levels, because I'm not concerned until we have that happen. And it could be, you could have a really big, couple of big days, and you could find yourself dropping below that. So if that is the case, obviously if I see a really big down day, especially, this will be the guide. So the US Nasdaq is going to be my big guide. Should there be one big day that drops me well below 10,000, that could be an indication that it potentially wants to go lower. But certainly up until 10,000, and give or take a few points above and below, at least up until this high, this whole area means that it could simply just be a weekly retracement, and a healthy one at that. So that'll be my guide. FTSE has definitely confirmed 6,300 as resistance and is now heading back down towards 6,000. You can see from previous reactions that there are buyers at these levels, and so bounces to the upside are to be expected. If you look at it here on a weekly basis, that's where it gets just looks like it's running out of steam, and it has absolutely been range bound for a while. So if I just mark that range, you can see here just wait 1, 2, 3, 4, 5, 6 weeks. Potentially another one, and this looks very nice as a potential turning point. Smaller and smaller and smaller candles, and you can see here a very clear level of resistance. I'm just going to mark that in, which is quite solid on price action. That's beautiful, and a break of the low that next month would indicate a move lower. So there we go. So there's some possible indications that this could be a turning point, so we could head lower. Again, here it would be a drop below that 6,000 level. So again, throughout the week, I can watch multiple markets and see when they start to break through those levels, if that is the case. And if it happens, it always happens faster, because your drops are always fear-driven. And people are panicking, people are taking profit, exiting their positions, reducing their exposure, and so the market drops aggressively. And you get your bears coming in short the market as well. So you get this, it's a tipping point, and it's aggressive, and it's fast. Here we go, EU stocks, looks like a solid rejection of that level, heading lower. It's also got its level of support and resistance. All I'm going to do here is just expand that out a bit, just move, oopsie, that was the wrong way. Let's just go, that was the wrong one, that's what I meant to do. There we go. And see how we break through that. But we're very close to potentially breaking the low there. That looks like a solid rejection of that level. Nice little bearish candle there. And it's a good turning point. It's broken below the moving averages, coming back up to potentially find resistance at those moving averages. All right, looking at Germany, the DAX as well. Nice, healthy retracement. I would expect, here's a level of support and resistance, perhaps a move down. This is a strong rejection candle. So, okay, so far, let's recap. The theme is kind of bearish weekly candles. A little bit overextended on almost most of those weekly charts. Definitely rejecting off these key levels. And also on the monthly coming up to key levels. So we're at monthly levels, bearish weekly candles, and sometimes we've broken the daily trend. Some of them we look very close to breaking it. So I think what I'm going to do here is err on the side of caution and say that my initial expectation is a weekly retracement, potentially, which is a smaller retracement, which is not that drastic on the daily. If it does, it doesn't happen. But it does mean increased volatility, without a doubt. It means on the lower time frames, I have to watch the 4 hour, because is the 4 hour going to continue down, or is it going to become bullish? And then by the end of the week, we're back up here. But it also means that I'm keeping in mind that this could very well then be an indication of a bigger move lower over the coming weeks. All right, that I'm keeping that idea in mind the whole time, but I'm not really going to commit to it until I see the clearer evidence of it. But I'm highlighting where we're entering technical evidence that is showing market exhaustion and a bit of weakness and a bit of failure, maybe a bit of bearishness, and take it from there. We have a downtrend on the Hang Seng. Let's look at the Nikkei. The Nikkei, strong resistance here. It's gone sideways for a long time. I mean, I would say as in since beginning of June, close to the beginning of June. Hasn't really gone anywhere, so that is produced a lower high on the weekly, which is a potential sign of failure, and this could be the case here as well. Same thing again, smaller and smaller candles, at least that way, and then a potential turning point. ASICs, there we go. Encountering very strong resistance. So what is the common element on almost every single one of these? On the daily appears to be finding, on most of them, not all of them, but on most of them, the majority is found strong resistance, multiple rejections on the daily time frame. Again, a weekly bearish candle. Usually the monthly has now retraced into potentially a Fibonacci level or a monthly pivot perhaps as well, but a Fibonacci retracement level on some of these round numbers as well, potentially good potential turning points. And the reason for that is that, again, there will be both bears and bulls in the market, and so the bears will be getting ready to load up on their sells. The bulls will maybe be reducing their exposure, not completely, but reducing it, and so you get a natural slowing down in this area because everyone's, well, the more cautious people will be sitting on the sidelines waiting to see what everyone else does before they then jump in, which is what I'm doing because I'm a retail trader and that's what I have to do. And so that's really it. So I think I can recap on that is basically just saying that I'm including the possibility that this could then be a weekly retracement. I think that's a positive, optimistic outlook, a smaller move to the downside before recovering on the daily, perhaps finding support and then resuming the uptrend. But at the same time, there's the second potential outcome here, which is that this becomes the beginning of the top of the next bigger move to the downside. As I said, I'm not going to load up. I need to see bigger moves on that. I need to see key levels starting to get broken. If we do get a couple of big days and it heads down, absolutely. But in the meantime, I'm just going to watch this. And so basically on a daily basis, every hour or two, I'll just be jumping between them to see if any of them are starting to break the lows, or at the same time, any of them are starting to find support. And really important for traders in the UK or outside the US hours, the US, there's often a pattern where the markets move lower in the morning in the UK, and then when the US comes online, it then becomes very bullish. So it starts out bearish and traps a lot of traders and then becomes very bullish and recovers, and by the end of the day, it's climbed. And this is something that gets a lot of traders. And so I do not, this is why end of day trading is very good at the moment, because usually it'll be the daily chart that by the end of the day, you've seen the collective move of both the bears and the bulls, and it gives you a clearer picture. But breaks of key levels are also very important. And that's it. So as I said, exercising some common sense, some caution, some good, decent risk management, and just being prepared that in this particular case, there could be early signs of a bigger bearish move. But for the most part, I also know that it's very possible the bulls, the buyers could still be there, and we could still see, especially with talks of a potential second, or sorry, not a second, but another stimulus package on the horizon, or some other forms of QE, let's call it that. Let's just call it that. On the horizon, we could see some recovery on that. We could see further bigger moves. That doesn't mean that the economies are actually nice and healthy. It just means that what's driving the stock market is potentially just, free cash, I would say. All right. Thank you very much. Have a great week. And yeah, everyone be careful out there.